trying to sell you on putting $500 or $1,000 into a CD and that a year from now, blah, blah, blah. Do not do it. It's not worth it.
Okay.
And they all do it just to get you to open up more accounts with them. So.
Okay. So I know we've talked a lot about building credit and kind of getting started from the ground up or getting your credit up a little bit, but I want to switch gears for this next question, which is, for somebody that has a credit score, let's say in the high 600s, low 700s, or even mid 700s, they're in a, decent spot when it comes to qualifying for their first home loan. But let's say they're 6 or 12 or 24 months out because they have to save up for a down payment or closing costs, that sort of thing. What are just the few quick tips that you can give to people that already have decent credit, but they want to continue improving it so that during that time when they're saving or they're getting ready for the time frame of buying the home, they can keep their credit increasing or staying stable and not decreasing?
Yeah, I mean, again, number one, maintain those credit cards. Get the credit cards paid down to certain amounts. You want to get more. The more, the better when it comes to credit cards. Meaning you are scored on your overall balance to limit ratio. Like if you add up all your credit cards back to back with the limits and then compare that to what you're actually spending. So you're going to be scored on that. And then you're going to be scored on your individual balance to limit ratios. So if you get a big chunk of money, what you want to do is to spread that amongst as many credit cards as you can to get as many as you can below the 50, 30, 10% threshold. You wouldn't want to. And what a lot of people do is, like, let's say that I have 3 little credit cards, right? Like $1,000, $2,000, $3,000, and then I got my big $15,000 card, and I get a $5,000 bonus. My first thought is pay that big one down, right? From if it's maxed out or close to maxed out at 13,000, get that thing down to 8, because that just makes me feel better. Where the money really would have been better spent to leave that one damn near maxed out and to pay off 3 of them and to get that big boost in credit score. From doing that. So that's one thing that can be done. The other thing is to look back at your credit, because a lot of times once we get up into that 640 to 700 mark, we kind of just start going, well, that wasn't so bad. Maybe we went through some bad credit stuff before, but it's obviously not hurting me that much. I'll just keep waiting and waiting. But you will get to that point in that high 600 range where if you have lingering collections from 3 or 4 or 5 years ago, that they are still absolutely hurting your credit. And while they might not be keeping you down in the 500s, and so for that reason you think you're kind of out of the woods, that they're like an anchor on you. They're holding you back. And so all the things that you're doing on a monthly basis, the great payments you're making, all these new accounts that you've opened up that you're doing such a great job on, why isn't my credit score getting higher? Is because that stuff's holding you back. So if you have time, circle back and work on those negative items from a few years ago, get them knocked out, do pay for deletions, do settlements on them, get them deleted if they're inaccurate in any way. And that's going to kind of cut that tie to that anchor and let your credit score just.
Okay. Now, can you just spend just a minute talking about the pay for deletion? Because you just glanced over it. I talk to clients a lot about it. And a lot of people have this misconception they should go back and pay old collections off, and then they see their credit drop. So can you talk about the pay for deletion strategy and how that can help them?
Yeah, let me explain the kind of the education behind it, and then that way it'll ring a little bit truer with the people that are watching this. So when you pay a collection off, it does not improve your credit. Okay, once something goes to collections, it's no longer like an active account, meaning the balance to limit ratio is no longer factoring against you. It's been taken out of this kind of realm of open accounts that are negative and put over into this one that's like a secondary collection area, right? So the balance to limit ratio doesn't matter anymore. So when you pay it off, you're expecting points back because you did something good. Well, that ship has sailed. It would have helped you when it was over here with the original creditor, but it's been sold to a collection company. So whether a collection is at $5,000 or $0, those two collections could hurt each other the same amount, okay? It's all down now to what's called the date of last activity. So the last time that a payment was made on it is what triggers that. And in most of these cases, that's been years ago, right? Because it's a collection now. So you haven't made a payment on that account for years. and then what's called an MOP rating. And this is one of those things that is not even accessible to the consumer. And it has so much impact on the credit, so it's a joke that it's not accessible to them. But there's this rating system that goes 0 through 9. 0 means it's not hurting you at all. 1 means that you're currently on time. 2 means that you're 30 days late. 3 means that you're 60 days late. 4 means that you're 90 days late. 5 means 120 plus days late. No 6. There is a 7 for bankruptcy, 8 for repossession or foreclosure, 9 is for collection, charge off, profit, and loss, okay? So each one of these collection accounts is going to be tagged with that 9 negative rating and the date of last activity from the last time that it was paid. When a consumer goes through and they start paying a collection off, what they do is they update the date of last activity on that collection, and that 9 rating follows it to today's date. To the credit scoring algorithm's eyes, it looks like you just added a new collection, not made good on an old one. So the way around that is that you do a pay for deletion negotiation, or you attempt one. When you're talking to the creditor, you say, hey, listen, I know how this works. If I pay you, my credit scores are going to drop. I'm unwilling to do that, but I do want to get you your money. If I'm willing to pay this, would you be willing to delete it? And if they say they are, you got to get it in writing, or you got to record the phone call. But that is what you're ultimately looking for, is a pay for deletion, because going back and just paying collections off is going to frustrate you quite a bit, because you're going to spend the money that you have or don't have, and you're going to drop your credit scores by 30 or 40 or 70 points trying to do what you think is right. And then you're going to get really frustrated, and you're going to re-sign your lease with your apartment, and you're going to circle back to this in 2 years, and that's too long to wait. So don't pay
for deletion.
off.
That's the way to go. So, just to reiterate what Sam said, if you have old collections, just don't go pay them. Do a pay for deletion or do nothing, but don't just go pay them, because that is definitely going to hurt you. And I've seen too many people that are trying to buy a home or get qualified for a home loan go and pay a bunch of old collections and think it's going to help them, and it doesn't. So hopefully that information gives you guys what you need in the strategy to get those off of there. So last question I have for you in regards to the credit stuff and getting people's credit up is, for people that are really in the high echelon and you're in the 700s or high 700s, what are the little things, the little tweaks that you think someone could make to get to that coveted 800 plus, to get to that perfect credit? Like, I'm sure you've looked at hundreds or thousands of reports over the years that have that 800, that coveted score. So if somebody's very close to that, like, what are the big things that you see that can get people over that hump? Is there even anything they can do, or is it just a matter of having that, decades of history built?
Yeah, I mean, for the most part, when you get up into those 800s, it's going to be bolstered. It's almost like you got to have a perfect score, right? And and be working the algorithm correctly. So what does that mean? It means no late pays, right? And for sure, none in the last 24 months. It means no maxed out credit cards. It means a proper mix of credit. You got good amounts of installment and revolving debt on there. It means pay history, and that's the one that you can't really mess with, right? Like, you can't really simulate that unless you get signed on as an authorized user. But that's where I think a lot of people hit that wall. They're like, why aren't I getting more points? And it's because you don't have a credit card that's 10 years old. You know what I mean? Yeah, I'm right up against that. I have now perfect pay history on my credit. I keep my balances fairly low, except for that, that mileage credit card I use. And because of that credit card, I'll bounce between like an 810 and a 780. There's that big of a swing with it. But that's because I have some really old credit cards. I have some cards that are, for my age, 8 years old at 36 is a fairly old credit card. And that's not something that, if you're coming into the game, you get your credit cleaned up, everything's great, and you're restarting credit, you just can't simulate an 8-year-old credit card. And so there are pieces of it that you can control, but I mean, you can control long pay history, but I would say if there's one thing that you're starting to, because if you listen to somebody like Dave Ramsey, right, or some other financial guru out there spouting off half-truths, what you'll find is that they're saying to close all your credit cards out and to get, debt-free. And the guy has to know by now that that would absolutely ruin somebody's credit score. I mean, if you close out a credit card that's 5 years old, your credit score is probably going to drop by 50 points. I would have to see the whole credit makeup, but there's a great chance that you're going to lose a significant amount of pay history and absolutely kill yourself when it comes to any sort of conventional financing. So pay history is the one that you can't really simulate, that you need to forecast a long way ahead. Keep those credit cards open, keep them paid down to where you're not paying a ton of interest on them, but don't just start going out and closing everything out thinking that you're doing something good, because you will absolutely ruin your chances of that 800 plus credit score.
Yeah, you really want to keep credit cards open with a 0 or very low balance to keep that history preserved. And I see a lot of people making that mistake, whether they do a refinance to consolidate their debt and then close the cards out, or they just naturally pay them off and they're like, oh, I don't need this anymore, and they close it out. And then they wonder why their credit goes down 20, 40 plus points in a short period. And that's exactly what Sam's talking about here. And the 800 plus scores that I see every day in my business, I always look at them closely because I want to answer this question and say, hey, why does this person have an 800 and this other person only had a 780? And what I see over and over again is I look and I see that they've got an old credit card or something that, when I say old, I'm talking about maybe 10, 15 plus years, where they've got this great history built up. They've got a really low balance. Ladies and gentlemen, that doesn't happen overnight. That's many years of methodical payment history every single month, no late pays, and just keep doing that. And the credit bureaus recognize that you're a financially responsible person, and then you can get into that 800 club. But with that said, even if you're not at 800, you can typically qualify for the best home loan rates, even with a credit score anywhere in the upper 700s. A lot of lenders have cutoffs around 740, 760. So don't get too wrapped up and worried about getting to 800. If you're anywhere in the mid to high 700s, you're absolutely going to get the best home loan possible. So wrapping things up here, Sam, you've given us some great info, a lot of tips and techniques here that I don't think anyone has ever heard. This might be things that, obviously the media is not talking about, most mortgage lenders aren't talking about. So there's a lot of value here, and there's probably people listening or watching that would like to reach out, that would like to get information from you about My Credit Guy. So can you talk to them about your company, what you do at My Credit Guy, and how you might be able to help?
Yeah, absolutely. So we're a full service credit restoration and credit correction company. We're a little bit different than most credit repair companies. We start off with a detailed interview, figure out what our clients disagree with on their credit reports and why, then formulate a game plan to go after those items and either get them removed or updated, or if they are validated, then we do help our clients with those settlements and pay for deletion negotiations that we were talking about before. All the advice I gave is all well and good, but for some people, it's still either they don't have the time or it's an intimidating process for them to kind of go back and deal with the people that maybe they haven't paid in the past, right? So we'll walk through all that with them. We help them establish those new positive trade lines if they need them. We counsel them on where to pay their credit cards to if that's a factor. We assign them to one dedicated credit coach throughout the entire process that handholds them, educates them, makes sure that everything's making sense. And then of course we circle them right back to you or their lender, Rob, and make sure that they're home loan ready. So if they wanted to get a hold of us, we always start with a free review. I would encourage you, if you're seeing this, get a hold of me through Rob, because what happens a lot of times is people come to us thinking they have bad credit. We pull credit on them, and what we find is that Rob actually could get the deal done right now. You're being a little hard on yourself, and maybe credit is where it could be. So have Rob pull credit, and then we can work together on that. If you're not ready for that and you say, hey, listen, I just want to have you look at my credit, and then we can circle Rob in later, you can get a hold of us. You can go to mycreditguy.com. And there's going to be a lot of good education resources there for you as well. Or you can always email me, sam@mycreditguy.com. And our number is 866-726-7339.
So Sam, if any of the viewers or listeners have been thinking about doing credit repair or credit correction, and they've probably seen some ads or maybe heard from someone else about these other big box companies out there that are literally taking on thousands of people at a time with false promises a lot of the time, unfortunately. So with that said, what makes My Credit Guy different from one of these big box companies or one of these other companies that are doing credit repair?
Yeah, just to throw out a few things, we charge 0 upfront fees. Nothing is ever due until the 30th day after clients have already received a bunch of service from us and are getting results back typically by then. We guarantee our turn times. We guarantee our price quotes. If a client comes back and feels that we truly have not provided value to them and they can show us even remotely that they're correct, we'll just give them a full refund, because what we are concerned with, we're not that credit repair company that takes on just everybody. We are looking for people who are very serious about getting qualified for a home loan. And that is who we have really become passionate about helping. If there's somebody out there that wants to wave a magic wand and just get some stuff removed from their credit that they know they owe, you probably want to go find one of those big box credit repair people, because that's not what we're doing. What we are trying to do is prepare you and your family for a long life of, successful financial transactions. And so we want that client that's in that same mindset. And what you're going to find is that our service is second to none in terms of, the attention to detail that we give, the hand holding that we give, the support that we give, the technology that's available to keep everybody on the same page with our portals, all that good stuff. So, we're different than other credit repair companies basically in every possible way that we could think of, in pricing, results, customer service, education, everything. We try to be at the opposite end of the spectrum of anybody that you would ever see online.
And guys, I can attest. I've dealt with a lot of credit repair and correction agencies in my almost 20 years now in this business. So I can say Sam's company, their customer service, specifically like their tracking, their technology, is heads and shoulders above anybody else. And that's the great thing, is that if I refer you to Sam, he's going to be keeping me up to date on what's going on with your credit file. So it's not just a one-sided thing, but they're going to be constantly giving us updates on the lending side, so we can immediately pounce and get you into a pre-approval or a home loan as soon as you're actually eligible to do that. And, Sam's really the only credit repair, credit restoration company that I've worked with over the years that really takes the lender as a partner and really, keeps us in the loop, and not just here's a client and then 6 months later we don't know what's going on and we have no idea. So that's a huge advantage, and why I really fully endorse Sam and his company and what they do. So with that said, Sam, I appreciate your time. You've really given some great info today. Everyone listening and watching, we really hope this has been of value. If you want to get pre-approved, if you want to look at a mortgage, you can definitely reach out to me directly. All my information and contact is going to be in the description and the outro of this podcast and YouTube. So feel free to reach out if we can be of assistance. We hope it helps, and take care.